How do you win with reforms and bold transformation? President Bola Tinubu yesterday signed 4 landmark tax reform bills into law, ushering in what has been described as a bold new era of economic governance in Nigeria. He adds that this is more than streamlining of tax codes, but is delivery of the first major pro-people tax cuts in a generation. The Nigeria Fair Taxation Bill, the Nigeria Tax Administration Bill, Nigeria Revenue Services Establishment Bill, and the Joint Revenue Board Bill also are aimed at cutting wasteful duplications and red tape and restoring investor confidence. You can define reform as a broad, multidimensional change initiative to improve something, often something seen as unsatisfactory, and can involve legislation, technology, systems, processes, and institutions. From my consulting experience, I can start by saying that most reform initiatives do not deliver touted objectives, not because of content, but I would say mostly because there are many dimensions in the context that can and will change. Resistance can also be more formidable than expected, and people who will be at the center of all reforms can be much less predictable in ownership and acceptance. You learn perhaps more from reforms and change agenda that fail, and these lessons have helped in coming up with what I've listed as 7 major pillars for winning with reforms. Hello, welcome back to Global Business Insights, where we take a closer look at the main business headlines moving markets all over the world. I want to focus today on reforms and build on an earlier video episode where we had Mrs. Yomi Badejo-Okusanya, CEO CPP Group and former chair Federal Inland Revenue Service, comment. Today we have as our guest Chief Yomi Badejo-Okusanya. Chief Badejo-Okusanya explains why getting communications right is integral to succeeding with any reform initiative, as it impacts key factors like ownership, giving hope amid uncertainty, and getting the critical buy-in. In a recent paper on reform, Mrs. Yomi Badejo-Okusanya advised to start with manageable quick wins, avoiding spreading too thin over many priorities, using pilots to learn, and she emphasized the importance of identifying key stakeholders, power structures, and building trusting relationships, noting that performance-linked incentives can also be potent long-term levers for transformation. So what are the major pillars for institutional success with reforms and transformation? First, start with clarity of vision, and the vision should be supported by a strong alignment of the key actors, change sponsors, leaders, and change agents around this vision. All need to be singing from the same script. Do not assume this is the case. Have time-based and numerical goals and objectives on clear improvement themes. For example, do not say we want to radically improve business climate. Rather say we want to increase foreign direct investment to $30 billion a year by 2027, or say you want to be the top 3 foreign investment destinations in Africa. Fuzzy goals, or in many cases no goals at all, and of course sudden changes in key actors, like I said, maybe from an election, can throw reform completely out of gear. Activity and excellent intentions are almost always often mistaken for progress, where especially data is either not available to track progress or simply disregarded. In many cases, the Data and Statistics Bureau need to be significantly upgraded to provide far more independent analytical insight to guide reform. Second, Change can be big, but it must be simple, especially the case for change. The most important document in any reform, in my view, is the case for change and not the reform itself. Immediately, stakeholders can see a burning platform that is an acute dissatisfaction with the status quo. You will find it easier to convince them to embark on a journey of change into what some will see as an uncertain future. Use the case for change extensively and repeatedly to reduce distrust and to recruit change champions. Third, allow more time for buy-in. There are changes that certainly need more time for digesting, time to soothe fears, time to heal loss of comfort, time for mental and physical adjustments, time to make preparations. Unfortunately, many change leaders think they have no time and in a hurry to declare a premature win. They lose far more time as agendas in the end up being aborted. Fourth, use change navigation tools like power and influence maps, stakeholder analysis, scenario testing to ensure your agenda is reasonably shock-proof and you have a communication and involvement plan that is also robust. Use of one-on-one meetings, small group seminars, and all the message design, identifying who to give what message and with what medium are not obvious, but should be based on detailed stakeholder analysis. Fifth, have a long-term philosophy. There is nothing more frustrating than succeeding in a 3-year process only to discover that the context has dramatically changed. Remember, if you're only playing catch-up in an environment that is moving at a very fast pace, you will soon find out that you have much more to do than you have planned. And the best reformers are great visionaries who can see afar, and they factor in the fact that the world and competing nations are not static, as they inherit so many legacy issues demanding immediate answers, but they can also see that the future is going to be all about data, artificial intelligence, high-speed quantum computing, requiring vast energy sources, new technologies, and expanded bandwidth, all kinds of new issues that we are now seeing, which we never thought about before, which should not intimidate leaders in a country still struggling to keep the lights on, but should be provoking much bolder responses, and I use the word bolder deliberately. Sixth, implementation can be far more important than conceptualization, and this is where technology assimilation, people readiness, and reengineering of processes mean that you may want to phase changes using pilots to test small changes and learning how to build ownership as you deploy various types of initiatives. Build into legislation and implementation a process to learn from missteps and to be able to move forward on a corrected trajectory as performance indicators trigger the need to rethink aspects of the reform. Finally, there are many elements to reform, and the key one is the trust factor. Legislation can be very important and indicative of progress, but in itself, it is not a guarantee that objectives and goals of reform will be achieved. Like Tinubu said of the tax bills, this reform is about rewriting the social contract and not just about efficiencies or compliance. And this is a beginning, not the end. One can learn from Kenya, where citizen resistance descended into mayhem. And I would say the elephant in the room has always been the trust factor. IMF may not tell you this, but you cannot reform beyond the trust capital you enjoy with stakeholders. In many cases, it is best to build quick wins in the earlier years and build trust capital, which allows you to succeed with far more wider reform areas in later years. Simple changes showing much more detailed accountability and transparency in taxes collected, simple local government, citizens' reports on how monies are spent for the good of society will go much further than reams of legislation that dots all the I's and crosses all the T's. pruning cost of governance and providing evidence on more due diligence on ensuring value for every kobo spent by government also goes further and should come ahead of legitimate demand that taxes, even if they have been cut to be made more affordable, should be paid. A lot can indeed be done to build trust that does not require legislation. Chief Yomi Badejo-Okusanya, a leading veteran and thought leader on communication issues, is the chairman board of the Nigerian Reputation Management Group, NRMG. He comments on the critical role communication plays to succeed with reforms.
The essential thing about reforms that anyone should know is that it's about the future, not the past. The past has gone. Yes, a reform may be to fix what has happened, but it always future focused. And in developing any reform that we agree now that must be future focused, there are two key elements. One is hope. Reform brings hope, or is designed to bring hope. And number two is also to solicit ownership of the people who are going to benefit from the reform. Hope, one, so that they have a more optimistic view about what the future holds. So that's why you find out that any government or administration, especially when they assume power, they talk about hope. They talk about the future. They're saying this is what we're going to fix. This is what we're going to offer. This are the things that our reform would change for the better. Number two is, like I said, ownership, because you need the buy-in of your critical stakeholders for your reforms to succeed. And sitting smack in the middle of both is communication. Without communication, you cannot sell hope. Without communication, you cannot sell ownership, or you cannot solicit for ownership.
Now to more business headlines. The stock market rallied with both S&P 500 and Nasdaq briefly trading above a fresh record high before pulling back. Nvidia shares rose to their highest level on record as it regained the status of largest company by market value over Microsoft with $3.77 trillion. The U.S. Statistics Office also released a revised U.S. first quarter GDP estimate showing a deeper decline of 0.5% from a previous decline of 0.2%. But on the positive side, U.S. initial jobless claims were lower than expected. New jobless claims data showed a latest weekly 236,000 print, which is below the 4-week average of 245,000. Also more evidence that the U.S. economy is not in a recession, even if GDP contracted in Q1. Analysts expect a positive GDP print in the second quarter in the U.S. The main event for Wall Street today could be the release of the Fed's preferred inflation gauge, the Personal Consumption Expenditures Report. Investors will be looking for signs that higher tariffs may have pushed prices higher. In the UK, Prime Minister Keir Starmer has offered to limit cuts to the main disability benefit to new claimants at a cost of £1.5 billion a year, and to bring forward a £1 billion package of employment support payments to this year. This is as he's forced to make major concessions to 120 rebel Labour MPs over what they have described as brutal welfare cuts to balance the books. And in Europe, yesterday, EU leaders discussed new proposals from the United States on reaching a trade deal at a summit in Brussels. Time is running out for the bloc to find a common position before a tariff respite expires on July 9. Asia-Pacific markets were mixed as China's industrial profits plunged 9.1% in May from a year earlier. The largest monthly decline since October last year. Japan's Nikkei 225 climbed to a new record high as Tokyo core CPI rose less than expected. Well, that's all we have time for on this special edition of Global Business Insights. This is Bode of Shosami. Enjoy your weekend. Bye-bye.